All right, what's up, everybody? Hope everybody had a nice and relaxing holiday week. Unfortunately, everybody assumes we come back and things get back to normal this week, but it's usually a quiet week this week, the remainder of this week as well. So we got to deal with another short week here before you know it's going to be the weekend again, and then officially next week. That's when things really start to get back full force. All right. So, and we kind of got a good taste of that today. It was really quiet. I don't know what the volume ended up as far as the market as a whole, but flow wise, it was really quiet. And one of those just non-event days. We saw some action come in later in the afternoon. But prior to that, it was really, really dead out there. Just normal flow, sporadic orders, no real notable activity out there. So don't be shocked. Don't be surprised if we see more of that this week. That doesn't mean there might be trades here and there, squeezes here and there, fades here and there. But for the most part, throughout like the early afternoon, the likelihood is we go into these lulls, so we'll see what it is. The main thing is not to force anything, and that's what I was really trying to get myself, get a handle on myself today, just to, that reality check, to take it easy. We're kind of in no man's land here coming into the week. Even for day trading purposes, and unless something really was getting me excited, where I see some movement, where I thought I could see some movement intraday, I didn't mind, sitting on the hands and doing nothing today. All right, and just to touch up on as far as where we came into the week, we coming off a nice little lift last week, right, where sentiment got overdone to the downside. Nice well-timed squeeze. We saw some flow behind it as well, right? Some buyers were actually active for a change. So not really that out of the ordinary today is a little breather day, especially off the news. I thought maybe we'd get a shot at an intraday squeeze, right? Where they overdid it to the downside. There wasn't any flow out there for me to feel that there was any edge. Let me lower this, hold on. Any edge in any of that. So, but we did see some buying. Let me get to, here's some of the orders. A couple things bought today. Mostly they came in the afternoon. All right, so my opinion, this was probably the best action of the bunch today, this BHC. And there's even an asterisk next to this one, because those of you who were watching the flow with me, there was a big block. When you look at the volume and you can see the total amount of these Aprils, you're going to be like, wow, that's a lot of April call activity there. There was a block for like 9,000 of them. So the block makes up a good chunk of the volume there, but there was some decent sweeps involved. You had this one of the 25s. That's where the block went off. I like this one even a little bit better than 19s. But what made it more interesting, later in the afternoon, you could probably put up an intraday chart and you'll see stock was acting a little bit different. There was a little band of cheap weekly spec activity that came in the form of sweeper activity. All right. And a lot of times when we see that on top of action like this, that's dated, he's trying to catch something this week, upgrade, whatever it may be, God knows, so that's pretty interesting anytime you see that, right? So that was the main reason why I guess this piqued my interest more than the other stuff. This Ulta came in late. This is more, September action, decent size. That line was opening volume. That was the one thing I wasn't sure about, but there was more than enough volume on that line to open. So, pretty much cut clear and dry here. He's looking for a bounce off possibly some oversold levels, right? September, short dated, and, decent wood, laying some juice with the 480. So not really a cheap bet. Now, Ulta reported, and that was the reason why this thing got beat up, right? It was an earnings thing. Let me pull it up because I didn't get a chance to look at the chart too much. Ulta. Yeah, that's earnings. So, if you were looking, I know a lot of you guys trade this name. If you're looking for sweeper activity, possible heads up that this thing may bounce back a bit, that's what that sweeper activity wouldn't, give you a heads up on. I wouldn't fall in love with it. That's kind of the issue with it. You want to almost see maybe November's come in with, a little gusto. So if you're looking for a little more than just that snapback type trade, but if you're just looking for an oversold bounce back, that's what that September sweep is doing, and maybe he rolls if he catches that. All right, so that's not bad. I don't mind this spec activity now in this market, the way things have been. It gives you something to trade. So if you're interested in the name, this was a cheaper order, similar ADI. Bullstruck was telling me that they have a conference. There's some sort of analyst or investor conference coming up. That could be the catalyst here. A little less than 100 grand behind that sweep. Apple David Igloo. This too is off a nice pull. Today. Nice pull there today. But this looks to me like a straight play on that conference. All right, and the last couple orders here, Baba. That's actually a small bet for Baba. Baba could catch some big time size, but it was clean. Opening order there, opening sweep. And AGQ, more silver, and the miner activity, they've just been ridiculous. I don't even know what you do with them at this point. They've been nice trades. A lot of you have been trading them off, even small breathers. This is the leveraged ETF for silver. Look at that. Wow. So you got some repeat activity there. I wouldn't buy into a day like that, but that's just me. We discussed in the past, if you guys are looking for names, they've got a handful of names. They continue to hit puff, puff, pass, as we call it, PAAS. Looks like a little reversal there today after going to new highs, but a lot of flow behind that. WPM, we went over these. That's actually a 9er high today. So you got to be careful with these things up here, in my opinion. Wait for breathers and pullbacks. All right, so that's pretty much sums up all the action there today as far as notable activity. You had some repeat activity. What's interesting, there's a couple of semiconductor names that have been resilient, to say the least. These things look actually good, and they look nothing like a good chunk of the other semiconductor plays. Look at this WDC. And it's been a good looking stock. A lot of action. You guys remember into this ramp here. This was a little breather here, and looks like it's wanting to start to come out of this thing now. And Micron hasn't looked bad at all, right? Similar. Another name in that DRAM group is STX. Not all the semi names look like, look this strong. So I don't know if it's a play on memory or whatever. You guys probably know more about the technology and the story and all that. But these things look really, really good, and they've been buying them almost every dip of recent. Not too much as far as dips are concerned anyway. Look at this too. This, right? We were talking about this action. Click. No, is it click? Not click. Clack. Clack. Right? Just a completely different look than even like AMD and stuff. Yeah, even Tree, like TSM has been one of the better names flow wise. Not as strong, but it looks good. You're right. Looks good. Well, like, look at this clack Tree. Looks really different. Like, this is new highs and pushing. So I don't know about you guys. This irritates me. This bothers me. And the reason it bothers me is because there's no rhyme or reason. You know what I mean? I'm misspoken there. There's obviously a reason. But, we can't put usually the semiconductors, when you want to catch that trend with flow, they move in packs, right? They move in packs. So, like, for example, if you're buying an AMD off flow, if the semis are strong, the likelihood is AMD will be strong, right? And rally. Or TXN will be strong and rally. Like, these all look decent, but you can see some look a lot stronger than the others. And that bothers me a bit. Here's a SWKS. We saw this catch some flow. This thing doesn't look as strong. It just kind of adds to the craziness of what's going on in this market on a day-to-day basis, right? You see, like, we're seeing all these trade war tweets and threats, right? And Micron was the one that would get hit first and foremost off all that stuff, right? And WDC, and that's not the case anymore. But the cyclicals, right, they still get beat up every time Trump tweets some negative headline behind the trade war or China, and that's what really annoys me. There's no rhyme or reason out there. Hopefully, when volume starts to come back in, that'll clear up a little bit. Yeah, the semi equipment makers move first, but which are the semi equipment makers, George? Are they all moving? Like, look at this one too, Tree. LRCX. This looks like we're in full-fledged and been in full-fledged bull market here with no pullback. These all look really good. So maybe you stick with the stronger names. Here's another one I like. Doesn't look as strong, right? NXPI. Caught, this is more sideways chop than some of the others. I don't know, guys. It's been, obviously, to say the least, it's been tricky out there in individual names. But all I know is WDC, more so than even the Micron, has seen better action of late and has been holding up better. Just looks healthier of late. So something of note. All right, so the point I was making, WDC caught some repeat activity today. Names like PDD, these things are kind of fried. And that's it. All right. Here's what I'm doing, okay? Just so you get an idea where we're at. I mentioned no man's land. I think that kind of sums it up best, right? Because, again, what's the playbook we've been talking about? Buying towards the lower end of the range when we have sentiment on our side, right? And, trying to avoid chasing this into strength, especially if you're not buying stuff with time that you don't mind being underwater. Okay, why? Because exactly what we saw today and may see for a couple of days here. We may see this chop around, hang out here, wash out some bulls, and then set up another squeeze. But, if you're early and you're chasing this for this up here and you get caught in this, it stings if you don't have the time to wait it out. All right, so I think the playbook hasn't changed for me. I don't know about you guys, but the playbook hasn't changed for me. What we're starting to see, which is a good sign, is some buying dated action. So in other words, some decent buying with time behind it. Okay, and as we spoke about, that doesn't mean you want to just go all in as soon as you see the action, and expect instant results, right? If they're buying Jans, Decembers, Aprils, the likelihood is they're going out there for a reason. Okay, there may be a short-term trade in it, okay, but understand you got to be playing for that short-term trade. You can't expect to buy April calls and catch that whole big move in September. Okay, that's being unrealistic. But the good thing is, similar to like BHC, which we saw today, WIN, we saw that late last week, okay? That's the stuff we want to eye into weakness, and any names that pique your interest off pullbacks that you want to, build positions in little by little with some time behind it, now's the time to start at least looking at that stuff. At least looking at that stuff. All right, because the logic behind it is the longer, if we hang out down here or do what we're doing here, okay, and they continue to buy stuff with time behind it, by the time we get sentiment drawn out, right, we were talking about intermediate term sentiment, by the time we get that lined up, we should have a good go-to list of names we want to play with some time behind it. All right, that's the logic, right? We used corrections in the past as examples of that, right? Of some of the action that came in, stocks did nothing, they chopped around, they did nothing for a while, and then when the market turned, some of those names end up becoming the biggest winners. All right, that's the way to look at it. Shorter term, you want to stick, you want to be quicker, and you want to stick with shorter term strikes if you're playing options especially. All right, and I still think the biggest bang for your buck is going to be off those sentiment squeezes, even not, that initial squeeze, the first day or two off that push. So that's kind of where I'm at, as far as shorter term trades, I'm looking to at least have that sentiment cushion on my side, and then little by little, start to add to some longer term stuff. And, we got the Fed coming up in a couple of weeks. That's going to be obviously a highly volatile event. We'll see where positioning and sentiment is going into that, right? If we start to grind higher kind of from here, little by little into that Fed meeting, expecting a 50 basis point cut, you could see how they might wear out a lot of that bearish protection crash type hedging that's been building up here. All right. If they do that, that could be worrisome because if the market doesn't like what it gets from the Fed, they can easily take the indices south and not worry about paying anybody. All right. So that's why it's kind of these next 2 weeks leading up to the Fed is, it's pretty big to say the least. We got September, which is a crazy month to begin with seasonally, right? We got probably one of the most anticipated Fed quarters here. They're behind the curve. Market's telling them they're behind the ball here as it is. This could be a make or break for the Fed in itself, right? Similar to what we saw last year when the Fed didn't do what the market was screaming for, right? In October, it was a complete rollover at that point. So, it's quite important. That's why for me, I'm not looking to go too crazy beyond that. And I'm looking to stay nimble, trade some things in between, and if we get these flushes, like here's what I'm saying. Tomorrow, let's say we get another flush, right? And we start to see a decent dent in some of that sentiment that got relieved here, that's where I want to look to buy something again, swing wise. But you don't want to go too crazy so far, from what I see. What else? Sentiment stuff. We had a long weekend here. That's why it feels like. Hold on a second. Most of the sentiment stuff that I saw this weekend, basically what you would expect. We got this squeeze, and that loosened up some of the bearish extreme that we had there. So that's simple. There's no reason to overanalyze anything else. That's where we stand. Maybe a couple of days of chop and weakness could set something else up. Anybody have any questions as far as anything to add? If you guys are members, as far as what they've noticed, what they're noticing out there. Anybody have any names that pique their interest? But for some reason, I guess it's based on the action we've been seeing. I'm still more focused on trying, this is my main focus, playing the sentiment squeeze. Usually you guys know, especially those of you who've been in the room with me a while, a lot of times when we get into a corrective phase, don't get me wrong, I love playing the sentiment squeezes, but I'm most excited about finding names to kind of tuck away with time, right, and add to them. I'm not there yet. I'm not quite there yet for a variety of reasons. Maybe flow hasn't been, the buying just stemmed up late last week. And I would like to see some more of that intermediate sentiment get a little bit closer, even though there's some stuff to be optimistic about. RRR, that's a casino, right? Yep, that's a casino, that RRR. Let's see. That probably got drilled today, though, right? I'm sure the casinos, most of them, that doesn't look too bad, though. Had a nice little lift. Doesn't look too bad. It's amazing. These trade war stuff, like you see some of the semis, this is what I'm trying to explain. Like, William, you got these things continue to get banged up because of trade war stuff. And now, the semis, a lot of them look good right now. It's just it's a weird market right now. Weird market. Yeah, CGC had some action today. It was just more of weekly volume than anything else. Probably playing a little squeeze there. See, maybe tomorrow this thing is flattish, and maybe catches a decent sweep or two. There wasn't that any good looking sweep there. It was just volume mostly. TLRY turned it around. Yeah, so these things just decided to squeeze for no reason. Was there any news or anything? Look at this. And the other one's ACB, right? I saw that catch a little bit of volume too. They may squeeze. Takeover rumors, are you serious? With these things. It's always when they get destroyed like this, takeover rumors. Who's taking over this thing? Get taken over at $2 maybe. But yeah, the only action I saw, ACB catch a little action, and CGC, but nothing too interesting. Stupid question. When does the money come off of summer break of the kids? Yeah, that's what I was saying, Paul. It's more of next week where we really start to see things get back to normal a bit. You know, because this week is a short week. A lot of people, I used to assume the same thing, that, oh, all right, Labor Day's over, we're back, you know, real money's going to start playing again. And the short week a lot of times is even worse than the week prior. Yeah. So we'll see. You never know. I mean, you never know these days. But that's usually, usually the case. What else did I want to throw? Keep throwing questions if you have them. I'm going to ramble, and when I see your questions, I'll answer them. Another thing that's being spoken about a lot, you probably hear it, the bull bear indicator, which is a pretty solid indicator out of Bank of America Merrill Lynch. I would label it, it's hard to even call it a long-term indicator, because I wouldn't say that it's something you buy off a signal and hold for years. Okay. It's rare that it signals. Okay. But a lot of times what it'll do is confirm at least a tradable bottom. So here's in simple English what I mean. Just because there was a bullish signal out of that BAML indicator, it doesn't mean we can't continue to chop around a bit in here. But usually what it means is, from my experience, this holds. This holds. And then allows some sort of uptrend, to take place where you can trade off these lows. How long it lasts, it all depends. It all depends. But I like to see that indicator line up with all the other ones we look at on an intermediate time frame, because then that becomes a lot stronger signal for me. Because when I see them all light up green, they've nailed some major bottoms. But this is, I think, guys, it's more of timing too, of where we're at. Whether we got the Fed ahead of us, we're coming out of the summer. That's an added wrinkle here, an added dimension that just is going to confuse us and complicate things a little bit more. Don't get me wrong. I'm not confused one bit off when we get our sentiment indicators lining up squeeze, that we got to play for a squeeze. That's not the confusing part. The confusing part for me is anything beyond that from here. Anything beyond that. That's the tough part here. With the Fed 2 weeks out. Let's see, what are the questions? SE, September and Jan calls bought last week, not large number. Yeah, and Samir, I talk about, most of the time I talk about the top action out there, but that goes for any name, any name you have an interest in, right? Just because SE is not catching the best action that I'm touting out there, if SE is seeing some buying with time, and this is something you were interested in, without a doubt, at least keep an eye on it, right? At least keep an eye on it. The problem is, Samir, here's what the point of me telling you even keep an eye on it. If you're not keeping an eye on it, without you noticing, they start to look like this and get away from you. You understand? Unless you were eyeing WDC as something you wanted to buy off pullbacks for the longer term, right, to position in, like, you wouldn't even know that this was taking place unless you were eyeing it. That's the point I'm trying to make. It's really difficult when you're trying to, eye 2,000 different stocks and then find decent entries for positions on all of them. That's my point. So you're on the right page there, what you're doing with the SE. You like the name, you've been waiting for a dip, right? Because that thing wouldn't dip for the life of us when we wanted it. You need to start paying attention as soon as you get that dip and you start seeing even a little flow come in. You should at least, have it on your screen and keep an eye on it day to day. Because these names, like I said, I wasn't eyeing the WDC and I had no idea, how strong this thing looked. No idea. So that's the point of it. Anybody else have any names to share, to add, that they're keeping an eye on here? Ooh, Pablo's got a question I'm scared to even answer. Pablo's asking about energy. And Pablo, I don't know, brother Pablo. I really don't. I mean, it's mystifying. I really don't know what to say about energy and energy related stocks anymore. I really don't know. Even when crude goes higher, these things get beat up. I'll put it this way. Here's the thing that I'm going to tell you, Pablo. A lot of smart money that's labeled smart money, they've gotten torched. They've gotten torched in this group. So, it's tough. I know we're seeing some flow. Yeah, this MPC, it had, if you remember, I actually traded it off this low. It was a real pain in the neck. I mean, it scarred me off this trade, off this flow recently. I didn't even want to take a look at it. But like Tree's pointing out right now, it's starting to act better. But I guess the point I'm trying to make, don't be surprised or don't act surprised if these things fail, because they fail religiously. I mean, look at some of these names. You're talking about big money lit up. Look at Halliburton. This is not no fly-by-night penny stock here. This thing has been annihilated. Annihilated. Like, I remember we were talking about Halliburton, being a decent longer-term play. Look at this. I mean, come on. This is getting to Scaryville now, right? With the debt that a lot of these energy names have. This is not a good sign. I can't believe my eyes on some big companies. Oh yeah, and those are highly levered too, right, George? Are those levered? Those, I think, like PXD and them are levered, so they can. Oh no? Yeah, the levered names. I mean, even some of the good-looking names once upon a time were good-looking, like this California Resources, CRC, just drilled, dead. So, for me, I don't have too much of an interest, because, obviously I'm reluctant to build a position in these things, because you could get your rear end handed to you, as we've seen. And for trades, if you're patient enough, there's easier stuff to trade out there than these things. There's easier stuff to trade. You don't have to worry. Like, what happens here is crude. If crude gets whacked, these things get hit. Then when crude bounces, these things don't even bounce. I can't. That's very frustrating. These things are in bad shape, and there's a lot of sellers for obvious reasons in these things. So for me, I would need to see tattooage as far as call activity, even more so than we saw on that MPC first go around, across the board. Like, I would want to see the ETFs and all the big names get lit up with call buying before I take a legitimate shot in these things. I just don't have an interest. Yeah, Tree, all these names, especially if you're looking for trades out of them, you get these little breathers and they snap back. The only thing I will add to this, okay, is that even with this stuff, Tree, I think that you're better off with sentiment on your side and being patient for that, in my opinion. You know what I mean? It's that much, better of a shot of you cashing the ticket there, right? You get the momentum of the market, and these names have been strong to the point where the market rallies. These things, at least you get a pop out of them, and you can get that quick trade out of it. But yeah, there's some good looking stuff out there. But for each good looking stock we look at, there are things that just look horrendous. Listen, I don't think you guys have heard me say this in the past. Okay, it's possible that this market, okay, moves higher, right? It's very possible. We've seen rallies where the cyclicals and the reflation trade doesn't participate, but it's almost like I don't even want a major part of that rally unless that reflation trade is back on. I'm being honest with you guys. I don't think any rally could have any lasting power until they're coming in hardcore and playing for reflation. I don't see it. I don't see it. Yeah, and that's why trade's like it's a sticky situation here for where it's almost like there's too much bearishness for us to really unravel to the downside. But, there's not enough interest in buying out there for us to start a whole new trend higher, right? That's kind of where we're at. And that goes back to what we were saying initially, right at the start of the playbook. Play for a lot of volatility, a range type price pattern at length until they really get one of the two sides to capitulate and take it the other way. But that's what it is. We've been saying it now for a while, right? Too much. This downdraft here made too big of a dent on bulls and reeled in too much bearishness for this market to roll over. Okay? Everybody was positioned for a crash off of this. Everybody. That's kind of like what McElliott has been talking about. Okay? And what happens is, the longer each day that goes on that there's no crash, that crash protection has to be unwound. Okay? And that's what creates these squeezes and, holds up markets. But, without that fresh buying in, coming into fresh names, like that real buying coming in, it's going to be hard to really get loose, and break new highs. I know it's like a broken record because we've been talking about it for a bit, but I think we're still in the same place here. We're still in the same place. Get too much, there's too much bearishness, I think, for a big move to the downside. In other words, to get through these lows with some gusto. We could have days like this, right? We can come down and trade down here like we did off here. But you see what happens, right? We come down a couple days, what happens? That's even more bearishness from short-term position players, and that's going to set up a squeeze, right? So that's what continues to happen here. But when we get to the top end of the range here, there's no buying coming in to push us higher. No one's, for good reason, guys. No, it's for good reason. I mean, look at what's going on right now. If there wasn't, put it this way, if there wasn't that much bearish positioning on this downdraft, right? So in other words, if bulls were stubborn and weren't concerned, it's just a buy the dip scenario, don't be worried. My opinion is, based on what we're seeing here, the likelihood is this market would be lower. That's my opinion. Call me conspiracy theorist or what? I think the market would be lower if it didn't have to pay all that bearish positioning. You know, there's not much that was, you know, not much was pricing in any positive. What was the positive? The Fed's being stubborn. After today's number, I mean, now they have to. Now they have no choice. They have every excuse. The only reason why they wouldn't cut, I think, a half is because they want to do anti-Trump type of thing. And I think the markets are not going to be happy with that, you know? So, like, based off today, now the Fed, I think, understands they're behind the curve and they're going to need to do what they need to do. You know, and without that bearish positioning getting extreme so quick, the likelihood is we probably, you know, would have done this and then another leg lower. Yeah, you know what it is, Nader? It's like you always worry about a panic, right? Whether it's a panic in confidence or a panic in credit, okay? But the problem is if everybody is all hedged up, in other words, if everyone put on their hedges, everyone put on protection, everyone put on their crash insurance, the likelihood that the market is going to crash after everybody did that is slim to none. You understand? So that's the point, that everybody who was worried about something big taking place did what they had to do during this downturn to protect themselves. You know, do you ever hear like the crowd being well protected in a crash or major downdraft? That's not going to happen. You know, so that's why, like, I'll give you an example, like what McElliott is saying is a possibility, okay? McElliott's thinking that the unwind of the bearish positioning we've been seeing still is going to take its course, and you get this kind of choppy grind higher into the Fed, and you're going to have the backdrop that now the Fed is going to do what the market wants. And then if the market's disappointed, you know, they unwound all that bearish stuff. You understand? You know, it's funny. I'm trying everybody, if I don't sound too bullish, Stephen, everyone throws the McElliott at me. Yeah, I'm trying to let everyone know, all right, that's McElliott's possibility here. That's what he thinks there's a chance of. You know, like they think, like, because McElliott, one of his options are the market could grind higher. They want me to be all gun ho. But I know you're messing with me. But yeah, so you know that's an option here, right? We could see that. Choppy grind higher. We could definitely see that. So we'll see. You know, today's kind of was a non-event type day where it's almost like today didn't happen, in my opinion, because it was so dead. There was nothing to take away today, right? We got weakness, but like from what the intraday indicator showed us, doesn't look like we're going to make that much of a dent. Sometimes they're off from like the squeezometer and the put the call, right? Some of those other indicators may be showing a little more bearishness, but you know, like even this year, you could see there was not much happened today. Not much happened today. All right, so that's kind of, any other questions? Some great questions though, and anybody looking to add something? You know, so don't even try. I see some of you trying to rack your head with the Fed. Don't even try to do it, because in my opinion, for whatever it's worth, I think it's all going to come down to how players are positioned going into the Fed. All right, the last Fed meeting, you had too many bulls in that situation. right? And you saw what happened there. Okay, when positioning is full, meaning players are too long, even if the Fed does what you want them to do, they're already long. It's going to be hard to really get a move, to the upside if everybody's already long. All right, this is a little different. Like if we were going into the Fed this week, right, and we're at where we're at sentiment-wise, yeah, there's definitely room for upside. But we got 2 weeks. We got 2 weeks. I mean, the HYG has been holding up well, right, Nader? All considering. That's something a lot of people keep an eye on too. When you see this thing start to see some real selling, that could be a problem. But look at this. Every time this thing comes down to where this thing gets washed out, as far as sentiment is concerned, you get a rally. Look at this, right back to where there's no bears left anymore. It's just an ongoing process, guys. It's just an ongoing process. So the moral of the story here is we take it day by day, and until we see concrete evidence that there's something larger at play, there's no reason to stick our necks out and do anything drastic. So right now, my opinion, I think the play is to stay nimble on almost everything we possibly can, but the bulk of your P&L in this type of setup is going to come off these squeezes. If we remain in this going into the Fed, that's where the bulk of the P&L. And don't think it's just price action, all right? Because what could happen is we could get a little bit of selling right here, and there's some noise behind it, meaning tariff news, a Trump tweet, and we could have a bullish sentiment signal right here, okay? And that could set up a squeeze. So don't think it's just where price is at that time. It's important to keep an eye on, how sentiment is reacting off that price action. All right, and just the opposite as well. We could, similar to today, we could come down to the lower end of the range, and we're not seeing it in the sentiment indicators we're looking at. And that could mean that maybe they could take it a little bit lower until they reel them in. But ultimately, the squeezes, the sentiment squeezes, that's the play here, and that's where the easiest money comes from, if I could use that word easy. Everything else is tough. I don't know about you guys, but for me, it's tough. For me, it's tough. Even day trading is probably a confidence thing too as well. But even the bulk of my profits day trading are coming off the first couple of days off the lift. You know what I mean? And over here, I'm doing a lot of scalping. I'm doing a lot of spinning my wheels. That's what I'm doing. I'm doing even intraday. Very rarely am I making, having a decent day off top of the range without sentiment behind me. So anybody have any questions as far as the setup is concerned, especially if anybody's a new member or anything like that? Pretty clear, right? Pretty clear. So, listen, a lot of us are degenerates, right? So the name of the game is to, play around, fool around, but don't get lumped up unless, we end up with a sweet spot of sentiment that we can, lean into a little bit, be a little more aggressive, even for short-term stuff I'm talking about. That's the name of the game, So even if you're, net scratching, taking break even, small loss, small gains off everything else, but you make some money off the squeezes, net, You're going to be profitable out of this mess, and that's the best you can hope for, right? Because when things loosen up, obviously, it gets a lot easier. You don't want to try to make too much out of what the market, the price action, and our signals are telling us, right? If it's not there, don't try to make too much out of it. Especially on those green days, you can get gassed up, you get excited. Oh, this is it, big rally, right? But a lot of times those big rallies are towards the end of that sentiment setup, and at the least some sort of pause or pull is coming when you're in this type of thing. Intermediate term sentiment, like for example, Trey, every time we get to the bottom of the range, we get really, really close. We get close to the point where you get one of these days where it starts, showing the potential of breaking lower, and you're going to be there. You know what I mean? You're going to be there. But every time we get that squeeze off the shorter term signals, it takes some of that heat away. Like, what's been lining up nicely with it. Here, I'll show you guys this. Hold on. What's been lining up nicely with intermediate term sentiment has been the fear greed. It's not always the case, but this go around has lined up nicely. Hold on, I'll show you guys here. Let's see. So I'll show you guys what I mean. All right, now this is just one indicator, obviously, but I just want to give you guys an idea, especially to tree off that question, what it looks like here. Yeah, Roku is the only stock that keeps going up. It's amazing. It's amazing. Oops, let me get this off. But what good is that when Roku keeps going up? Probably people shorting it because everything else been going lower. Here's what I mean, Trey. Right? So right here, right? Look where we're at, and that lined up with the short-term bullish sentiment signals we were getting, right? So our short-term signals were telling us the likelihood is we were going to squeeze from there for over the short term, and every time we get there, you see, right, there's a little bounce higher. So it's not like we're up here again, you know what I mean? But we're just, we're not down here, and the likelihood is like when this gets to 20 or below 20, all the other ones will probably line up with it. All the other ones will line up with it. But the thing is, too, guys, you don't want to get, hung up on minor details. Like, for example, the point I'm trying to make is, all right, we're right here, right? Okay. If we see like call activity, sweeper activity come in and unleash the fury, right, on a gazillion names we've been hoping for ages would catch sharp sweeper activity, like caterpillars and the cyclicals and more semis or tech names. If we see flow explode, you don't want to say, oh, well, I'm waiting for down here, otherwise I'm not buying any. You know what I mean? You don't want to do that, okay? Because the flow, the sweeper activity is telling us it's time already. Now it's time, okay? But if we're not seeing that, right, and we're just seeing selective buying like we're starting to see, at least we're seeing some selective buying out there. We weren't seeing anything, okay? So it has to start somewhere. when you're seeing just selective buying, you want to be patient. You want to be patient because there could be, some more downside before these things line up. Right? That's the point I'm trying to make. That's the point I'm trying to make. So one of the other is going to light up. Okay, and here's what I mean by one or the other. The reason why, in my opinion, intermediate term sentiment, those signals have been so strong is because, from my experience, okay, when it gets down here, you see the smart money do some serious buying and they start to pick up the pace. It may start selective, but they continue to buy and continue to buy and continue to buy. So even though the market may not be going higher, the flow still looks incredible. You understand? Over the course of, let's say, weeks. But ultimately, it's the flow that you will see explode when it's time, for upside. The bottom may be in, but I'm talking about upside. Usually the sweepers will get the ball rolling. For credit, biggest issuance day of the year, largest number of issuers ever have. Yeah, I just, the bond market in general, you see the inflows into bonds. That's why the BAML bull bear indicator lit up green, because the huge inflows into bonds and outflows out of equities. It's out of control. There's definitely, it may not be major, but there's some sort of fear bubble out there, and it needs to pop. That's basically what we're waiting on. Last week's gap up then fades. If and when we start to push out of this range, do you see a day of bull sweeps that are relentless? Yeah, so that's a good question, Paul. Okay, so here's what ultimately would be my sign, a signal to me that sweepers are at least positioning for upside. Okay, so here's an example. All right, right now, let's say, like we've been discussing, we're waiting for sentiment to line up again, right, for us to get excited about some sort of trade, right? But if tomorrow we come in, okay, and sweepers start attacking aggressively new names, right? So let's say tomorrow Caterpillar catches $1 million sweep, right? I don't know, Deere catches a $500,000 sweep. Texas Instruments catches a $500,000 sweep. Once you start seeing them get aggressive and the size start to pick up in initial activity, you hear me throw that around a lot, right? Initial activity, new names, new setups. That's our sign. That's a sign that they're playing for upside. And you're going to see it's not going to be one name like today, BHC out in April. Okay, it may be BHC Aprils, but they may be hitting Caterpillar Octobers and Novembers. You understand? So they're playing the short term as well because they're looking for the move short term, right? If they're just selectively buying names December, April, that's kind of showing us, all right, they feel like they may be early and they need some time, right? So what do we see like last week? There were Netflix, there was some March size activity for March, right? A lot of time behind it. Even though the market and the squeeze happened the following day where Netflix had, a big day the next day, it's irrelevant. They were positioning in March strikes, right? Way out there in time. And then we saw Win December's, right? They bought on Thursday or whatever it was. So you see what I mean? How selectively they're picking some names with time behind it, right? So that's not showing us that they're getting excited, they're getting aggressive for a move now, because they wouldn't be going out so far. Make sense? Right? They wouldn't be going out to March if they were looking for the move now to catch. So that's what I mean by that, okay? But in corrections, like if you remember last, because the McCown numbers, native, the McCown numbers, he's not playing for the McCown numbers. If he was playing for the McCown numbers, he would have played weeklies. You know what I mean? We always see win weeklies into McCown numbers. He's not playing the McCown numbers. You know? So, like for example, if you look at our past correction is a great example of what went on, okay, last year. All right. If you remember what they started to do, they started to buy names with some time behind it, right? Little by little, QSR, then the Yelp, then the SE, okay? So even though the market didn't bottom yet, okay, that action started up like right here. As the market was selling, right? As the market was selling, even some names got hit here, like PAGs and them, okay? As the market was in a correction, they were selectively picking names with time, right? And then what they do? They rolled down if they were really early. They added, right, at lower levels, okay? But where did the flow explode? The flow exploded after the bottom, right here, when they just started to buy everything, you know, including mostly shorter term stuff. So that's the difference. Yeah, so the difference from what we're seeing now, instead of just Netflix March calls, Win December calls, BHC April calls, they will start hitting names for September, October. You know what I mean? Looking to catch a move now. Yeah, like for example, like you see like a Sono, right? That wasn't that dated. They were looking for the move, right? So you will see more action like that. So instead of just one Sono, you know, they'd hit 6, 7 names over the course of a day or two. And you see it explode. If you guys remember, that's what we were talking about when we finally bottomed here. Okay, it wasn't that there were like 3 names that caught big action. They hit everything. Remember we were saying they hit every sector, every name you could possibly think of was catching sweeper activity. They hit everything, right? Because they were excited about a move now. It wasn't about building a position into weakness. They were looking for momentum now. So that's what would change, Paul, for us to get a heads up that this thing's ready to go north. Okay? And a lot of times it'll come into weakness too. That's the beauty of it, Paul. I wish more of it, but a lot of times, like a day like today, okay, we sell off, right? They would have came in like this and bought up that weakness, super aggressive. They would have came in hitting Microsoft. They would have came in hitting AMD. They would have came in hitting SPY. They would have came all into the weakness today. You understand? So the market sells and they buy it all up. Then the market tries to sell again. They buy it all up. And that's it. Case closed. That's your sign that these guys are positioning for the move now. All right. So those are the things to look at. And again, you'll know it, Paul. You'll know it if you're on private Twitter. You're on in the room. You can't miss that type of action. You can't miss it. You know, you can't miss it because there's so many names that are catching action. You know, initial setups, new setups, that you feel the excitement. You feel like you never have enough. But that, that's not, I mean, again, today is a holiday week and all, but what happened today? Right? Nothing happened today. Nothing. It wasn't even that the flow was bearish today. It's just nothing happened. Yeah, and that's what it is. And that's the problem with the market now more than ever, Paul. So that's always going to bother us. But you see, look, right? Look at this. Bing, 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 bing. All right. So this is the last note I'll let you guys run. That's why, Paul, when it comes to like positioning, right? You can't wait for this, because this market now, this is what happens. Okay. You have to start looking ahead of time and start finding names you're interested in. You understand? You can't wait for this. And then, over here now you're looking at names that have screamed higher for positions. You have to be ready, if not looking to piece in to some of them already. You got to keep your eyes open. Now, doesn't mean you have to load the boat now, but you got to be ready now. This is right, exactly. Stalking time. Thank you, Tree. I was looking for the proper term. Exactly. Stalking time. Not to sound corny, but it'll teach and add to the discipline of this game, because being successful at this game doesn't mean buying and selling constantly. Is getting yourself ready, doing the right things when you're not trading, when you're not buying and selling. Instead of taking the day off and going to the beach, right? Is watching the market, watching the flow, watching what names, what price action is doing in names you may be interested in. That sort of thing. Being ready, so when the turn comes, you already know what you're looking to do. Otherwise, that's how fast they happen now, guys. I'm telling you, it was always fast, never this fast. Now it's out of control fast. And there's nothing you're gonna miss a lot. You're gonna be pissed off that you didn't get in this name and that name, and that's the inevitable. But if you're not prepared, you're gonna be really pissed off, Tree, so many people tell me that. Tree saying that what she'll do is she'll take a tiny piece of something she's interested in. So this way, she already pulled the trigger, and she's ready to pull the trigger when the time's right. She owns a piece. Her eyeballs are on it. She's ready. And Tree, honestly, it makes a big difference, right? Even just owning a little piece gets you paying attention so much more. Huge. But that's a great point, Tree. Great point. All right, guys. Go enjoy your night. All right. Don't be shocked if we got a quiet week this week. It's okay. Right. We'll see what they buy. Maybe there's a couple little short-term little trades we can get involved. Keep an eye on that BHC tomorrow. All right. So what I'm getting at is BHC opens up flattish down tomorrow. Keep an eye on those spec sweeps, because they may be coming into play a squeeze here. Okay. So if you didn't take a shot on it today, tomorrow she opens up flat or down. Keep an eye on those sweepers, because if they come in tomorrow, there's a good shot they're trying to catch something. Squeeze, upgrade, something of that magnitude. All right. But other than that, I really don't have much of anything else to watch. Oh, the Ulta for a bounce as well. All right. Be good, everybody. Thanks for stopping by. I'll see you mañana.